Hello, this is Osama Rizvi, and welcome to another episode of the Monday Macro View. Um, as usual, we are going to discuss some macro, bigger picture elements, and I thought it would be good to give you a snapshot of the global economy because we have been hearing quite conflicting opinions about the direction of the world, about the world's economy, and I think it is our duty, it's my duty to just continue to highlight to our viewers and audience that where are things headed actually in terms of the various economic indicators that we track on daily basis. So let's just dive right in. First of all, if you look at this first slide, you'll see that this provides a snapshot of the global economy in the month of September. And it is no surprise that the main topic discussed here is that of Chinese economy. The outlook says that, and we know this isn't anything new, but just a good reinforcement and a reminder that renewed problems in the housing markets are expected to weigh down on Chinese growth, and liquidity crunch is expected to worsen amongst the real estate developers. This can be seen if you look at the right-hand side. This could be seen by the charts, by the chart wherein the red and blue line both have a sharp downturn. The one of them representing housing sales, the other housing starts, and overall, I think because this housing real estate sector accounts for about more than 30%, 35% housing, 20 to 25% of GDP, Chinese GDP. So this is expected to continue to weigh down on Chinese economic demand and, just keep the global bullish sentiment in check. Uh, Lots of bad news coming out, but so it's good and refreshing to hear about Brazil, where economic growth projections have jumped, as you can see on the right hand of this black line for 2023, because this is because of two or three reasons. The agriculture sector has been performing well. The services sector has been more resilient than expected. This is true for the sector across the world. It has been holding back really the global economy, in as manufacturing across the world have taken a nosedive. And interest rates have also begun to fall. So that's sort of easing pressures on consumers. But everything is not as good across the world, especially in the UK, where you looked at projections for 2024 aren't really good. Similarly, for the US, it's half of what we're experiencing in 2023. The world is expected to still grow less than its average, which I think was around 3% or more than that. The outlook for BRICS look pretty good. And we will discuss it in the next episode, how and what sort of potential does this economic bloc carries moving forward. I don't really buy this Eurozone expansion story because, as we will see just now, things seems to be pretty, problems seems to be stacking up for the Eurozone economy as well. Germany, it is expected to grow from contraction and recession to somewhat expansion, but still less than 1%. And Chinese economic growth is expected to remain stable. The next slide, this really speaks about, so this is specifically about Pakistan, but this speaks about a lot of other countries, developing countries, where we have sky-high inflation and the energy prices are out of reach of a common man. If you look at this chart, I just did some quick calculations. So compared the petrol price here in Pakistan with that of the US. Surprisingly, we have higher petrol price per liter than the US, and this has transformed our society into a textbook example of a cost of living crisis, and it's just there is no other way of putting it that it's one of the toughest year in this country's history as well as in many other countries' history. We discussed the last time that in the last 4 years there have been about 15 defaults, whereas in the last 2 decades, there were about 19 defaults. So that is how tough things are getting for certain group of countries. Economic forecast for Europe, as expected, you can see it's quite low because recently, and I would highly recommend you watch this episode by Mark Rossano, Europe has officially reduced down its growth expectations. Inflation is expected to remain sticky from 3.2 to 3.1, but the interest rates in Europe has reached its highest points. Global economic prospects remain shady, blurry because of expected geopolitical events. We have a lot of issues going on on the back burner. Chinese-Taiwanese issue, the Russian-Ukrainian war is still not over. So that's still there. Finally, the debt levels. The debt levels across the world has been a function of many things. This started before the pandemic, but the pandemic exacerbated this trend. And now the total debt now stands at 235 trillion, which is equal to about 240% of the global GDP. This is down from 258% in 2020, but it's still above the 229% recorded in 2019, just before the pandemic. So debt and specifically, I would like to mention the US and China. So debt as a share of GDP has risen in China to the same level as that of the United States, but in dollar terms, Chinese total debt, 47.5 trillion, is still markedly below than that of the United States, which is close to 70 trillion. I mentioned this specifically because there have been lots of calls recently, because around 1/3 of US debt is about to mature in the coming years, and that has become talk of the town recently. And in the near future, that can create some certain problems. Once again, it is important to mention the disproportionate effect of this rising debt on the developing countries, because they are at a high risk of debt distress, what is called debt distress, and about 1/5 of emerging markets have sovereign bonds trading at distressed levels. Finally, something about the global recession. We covered it in the last week as well, but now this is significant. BlackRock, which manages around 9.4 trillion of assets under management, and another wealth management agency, has warned of a recession risk. I know that there have been quite downward revisions recently. Goldman and others, they have revised their probability for a recession, and it has come down to around 20-25%. But still, if you look at the global fundamental indicators, things are not looking really good. They expect a recession in the coming 6 months or something. Also, other important economic observers like Ray Dalio, he is also worried about an impending recession. So I would just continue to remind that we aren't still out of the woods. Finally, the market sentiment tracker. There is a lot going on the left, the recession in the bearish side. Eurozone interest rates are at its highest level. Bond markets are sounding the alarm bells for the past 212 days continuously. The pandemic era savings are depleting, and recession can be expected in the next 7 months. Iranian crude exports have hit highest, so that might also take oil prices down. Volatility index, the fear index, has jumped 9% recently because of the activity in the global stock markets. The debt issue is still there. European gas consumption is down between 10 to 15%, not surprisingly, because of a downturn in the manufacturing sector. So that's all from today. I'll see you all next week. Thank you so much for watching.